Hello everybody, Jim Malone here. It's Dallas Trading Floor and it is a Thursday, October 15th, 2020. And it looks like we are not going to be broadcasting on looks like we're not going to be broadcasting on YouTube, on LinkedIn Live. Hopefully we will be soon, but currently we're on Facebook. We're on YouTube and we're on Periscope. For some reason, we're not on Twitch today. Hopefully, we'll be on Twitch here pretty quick. Trying to iron out all the technical difficulties. Not really difficulties, but you know how that goes. A little bit short on the staff, so sometimes don't have everything totally nailed down when it comes to the technical. But let's get into the slides. So there we go. Yeah. So basically, we are still in a confirmed uptrend, which is kind of amazing because here we are. We're in a confirmed uptrend, and the market is down. So go figure. We've pulled above the 50-day moving average, and then we kind of reversed, and this is the third day in a row that the spiders have been off, so it's just really interesting. It just seems to be very kind of squeamish, kind of we can't seem to really get a direction here. Of course, we had that huge sell-off on Fastly yesterday. I definitely got whacked a little bit. Fortunately, I had a stop loss on it, but I still went down for the count. I did have it hedged, so I was okay there. But this is, always something that is, when that happens, it's always it's a good idea to start reviewing those stop losses. And basically, when you buy a stock, the best thing to do is put a stop loss in, good till cancel, at about 7% down from where you bought it. And that way, even at a market stop loss at that, not a trailing, because in a trailing stop loss, it won't actuate if we have a severe pullback like we did on Fastly. So, it's just one of those things. Fortunately, my stop loss has kicked in, and it went to the right way. But boy, it was severe. It was a severe downdraft basically at the end of the day, and basically all it was Fastly did not quite make their number. I mean, it was very close, did not quite make their number. So, this kind of to reiterate, sometimes it's best to sell the day before an earnings announcement because it can cause these tremendous downdrafts, especially when the market is trying to find a direction. And we've been in a correction, and then we pulled to an uptrend here. We've been in an uptrend. The market is in an uptrend, but it's a weak one. So at least until the election, I think it's going to be kind of a little bit wait and see kind of thing, and we might want to be a little bit more careful about putting on positions. I definitely am, becoming a little bit more careful about my positions and putting them on. Now, here's what's happened. In the last 3 days, of course, we have had the spider move down. It's 347.16 was this taken, just slightly down, not very, very much at all. The key levels here on this are about 320. This is where the COVID-19 retreat happened from about basically the last weeks in February on down to basically March. That's kind of when it made its biggest movement down, and then of course we bounced and we moved up very rapidly. We sort of hit a ceiling at about 360. That seems to be where, and then we're pulling back now from that. I do expect to see a bounce at the 50-day line, so we may be in store for a little bit more of a pullback to about the 325 level on the spider. So, we just have to be prepared for that and kind of be a little bit more cautious than we've been. Also on the QQQ, it's also been pulling back too, and of course this is where most of the growth stocks live. So this is also very important. This is the third day as well for it to be pulling back. Its relative strength has sunk a little bit. And again, I think it's going to be pulling back to this line. I think 275 is a very important level on the QQQ. So we're at 289 right now, And I do think that, hopefully we'll see a bounce at about the 275 level. And I think that will be important if it does, move at that level. So that's kind of the general thing. I have reduced my holding somewhat, as you can see. I was stopped out. I was stopped out of Fastly. Oops, there we go. I was stopped out of Fastly, but I'm still in Taiwan Semi. I'm in Tesla, of course. I'm in Sorrento. That's my only one that's up. Sorrento Therapeutics. Cloudflare. This one may be vulnerable, so we've got to be careful. This one is run up very, very quickly. I've done very well on it, and I think a lot of you have too, because we had a trade alert on it as well, and of course we had a trade alert on the Fastly, so it doesn't necessarily mean that that's necessarily the thing. Digital Turbines pulled back a little bit as well. Qualcomm. So this is kind of where I'm at. And so you get a kind of a general idea of kind of where I'm trading the market now. So let me kind of show you the small portfolio that will kind of give you an idea of where I am currently trading. And so, by the way, you can see this small portfolio super easy. All you have to do is go to www.tradingfloor and sign up, and first and last name, and it's totally free. So here is what I am currently in the market at, and we'll take a second there and it'll draw. There we go. I moved out of several positions here. I've moved back into cash, kind of seeking shelter here from the storm a little bit, but I'm still in Taiwan Semi. I'm up on that. I'm up on Tesla. I'm up on Qualcomm, Cloudflare, and Digital Turbine. I did, for full disclosure, I want to show you this. I did sell Fastly here. I sold the 8 shares. This was the full position, and we did take a bit of a loss, $124, and that was down 15%. And that basically was up, up into the close, and then, unfortunately, as it opened up, I was stopped out. So my stops, even though they were at 8% down from where I had bought the shares originally, it had moved up, I still was triggered. It fell quite fast, and so I was triggered basically, and I ended up with about 15% down. So that was kind of painful, but you take the good with the bad. It's not all up, but always remember, it's the stop losses that count. Make sure that you have those stop losses in there, because they really, really help when we get a market that just moves so quickly like it did with Fastly. Just kind of want to show you the website on where you can sign up for the action trade alerts. This is how the website looks. It's Sal's Trading Floor, and subscribe, of course, to the free trade alerts, first and last name, and then you just hit the subscribe button there, and it goes out to everybody. It puts you on the list, and it's totally free. And if you want to get a link to the small portfolio, the one that we just saw, first and last name, and hit the subscribe button, and there you go. Now, if you want to learn kind of the system that I use to trade, and it's a very successful system invented by William O'Neill. It's called the CanSum system. Go over here to the Learn to Trade bookshelf, and these first 2 books are a great way to get started. How to Make Money in Stocks, A Good System, Good Times Are Bad, by William O'Neill, and then this companion book, How to Make Money in Stocks, Getting Started. This is more of a checklist book, kind of gives you really a high-level overview, and it's quite a good book. And those are both available on the website, Learn to Trade bookshelf. So just wanted to kind of bring that to your attention, and we'll get right into the questions. Thank you for holding on here. So, Mr. Sid, thank you very much. Your thoughts on TSM and apps? Is it good to hold? Good question. Wow, this is a very good question. Very apt, because of the huge, movement, the really the pullback that we had on Fastly. That, I read actually that is one of the fastest pullbacks in history. I find that amazing, that is indeed the case. So you always want to have those stop losses in there. So let's take a look at that on my MarketSmith chart. And bring it right up now. There we go. Okay. So let's look at Taiwan Semi. Taiwan Semi had, posted some good news. And I was debating on whether or not I was going to hold it through earnings. I'm kind of glad I did, because it looks like even though it has performed fairly well considering everything out there, but it's pulled back a little bit. It's right now in the buy zone. I still think it's worth holding. What we have to see, I would be holding this if this stock stays above 86.33. Then I think you want to continue holding it. If it drops below that, and that's the 10-day line, I think you want to start to consider selling it. And definitely, if it drops below the pivot at $84, then you definitely want to sell it. But I would hold it right now. I do think we're going to see a bounce off the 10-day line. I don't think it's time to sell it quite yet. But we did have some. The earnings. There's been a little bit of a sell-off into earnings, but the pullback hasn't been too severe. So I do think that we hopefully will start building a position. Many times this is the best time to sell. It's the day before the announcement, because definitely the old adage, buy on rumor, sell on news. Well, that's definitely true when it comes to stocks, because the market will price in the anticipation. So typically, will have its highest level right before it, it has earnings. So it's always a good time to possibly sell it right before earnings. We've definitely had a pullback on digital Turbine as well, but we're still above the 10-day exponential 10-day line, and we're definitely above the 21-day. So I am pretty confident on this one. We'll just see how it trades tomorrow and into the weekend. It still has a 99 relative strength. There's been a lot of selling, but I still think it's if it holds that 10-day line, it's good. But I think it's time to possibly start to set up the stops a little bit on this one. What I would recommend is possibly moving your stop up. So to find that new stop level would be to try to find. I would consider setting a stop right now on apps at 34.47, 34.47, and that's a stop on apps. And the reason for that is because that is where the 21-day exponential moving average is, and I think if it breaks through that lower, then it's going to go lower. So that's probably where I would be setting my stop loss, my new stop loss on apps. So I'm going to put that out there on the chat. New stop loss on apps at let's see, the 34.47. All right, so put that out there for everybody. Hopefully they'll get out there. And by the way, if you're looking on TikTok, super easy to see what I'm doing. I'm actually showing charts and putting out stop losses recommendations on the chat, and that's on YouTube at youtube.com/Dallas Trading Floor. So thank you very, very, very much for that question. Really, really like that. Okay, so let's see. Earnings are up. Yeah, absolutely. Earnings are up on TSM. I think it is a good sign, actually, for TSM. I think that TSM is going to see very nice into the end of the year. So I'm still holding TSM. And I do think it's good, but I think you want to be careful on TSM. Let me see if I can give you a stop on that that you might want to set, just just for extra safety, because we're entering a choppy market. It's nothing to do with Taiwan Semi. It's just the market and the election right now. I would set my stop at 84.38. 84.38. So I'm going to put that out there on the chat too. I'm going to put set stop loss on TSM at 30 at 84.38. 84.38, and that's the 21-day line. All right, let me put that out there for everyone on the chat. Thanks for that question. That's a great question, Mr. Sid. Appreciate it very, very much. And I think that it should hold very well. Apple, let's see how Apple's doing. Here's the thing about Apple. Apple is coming in. It's pulling back down to the 21-day exponential. It's pulled back a little bit today. It's at 120. So definitely, the market is saying that, we are, the market is saying essentially that we're going to be a little bit more choppy here because Apple is pulled back. We're 14 days in front of earnings. I don't think you want to hold Apple any more than about 13 days. I think you possibly want to sell this one before earnings. The question is, where are you going to set your stop loss? I would set a fairly tight stop loss on this one at about 115.68. 1568. That being the 21-day line. So I would consider setting it at the 21-day line. So I'm going to put stop loss on Apple at the 115.63. That's about where I would put it. These are just suggestions, by the way, for stop losses, but I do think it's probably a good idea not to enter a new position into Apple right now. If you do have Apple and you want to hold it into earnings, I think you ought to consider possibly selling your position the day before earnings. So that's what I would do. I currently don't hold Apple, but the market is moving a little bit sideways right now. So it's a little bit more volatile right now. So that's why you want to be careful and put your stop losses out there. Okay, Tesla. Should we keep it or sell it? I'm gonna kind of go out on a limb here with Tesla. I think you should keep Tesla, and the reason I think you should keep Tesla is because I do believe that it's in a different phase than other ones. It seems to be creating a new base pattern. The buy point on it was just raised to 502, and currently it's selling at 449, and it's off a bit. I mean, it's off $12 today, but it seems to be holding the 10-day and the 21-day exponential. So I probably would not be a seller at this point of Apple. I mean, of Tesla. It is going to be coming through earnings in 6 days. So the thing about it is I'd be careful with setting the stops. I wouldn't necessarily set the stop up too much on this. It may pull back when we hit earnings. I mean, it could definitely pull back to the 21-day line very, very easily, and that is at 427. I think it could pull all the way back down to the 50-day line at earnings. So if you're willing to hold it through, and that's the 50-day line right now is at 401. So I would set the stop loss a little bit looser on Apple than I would on Tesla than I would on Apple, just because I do think it has a very nice upward trend. Better than it's still in an upward trend. This was the first day that it pulled back, whereas Apple has been pulling back for the last 3 days. So I do still see the trend of Tesla as moving up, whereas I think that Apple and some of the other stocks are correcting. So that's kind of where I'm at on that. But it's a judgment call. So but I would set my stop loss probably about 401 on that, because I do think that it will hopefully stay above that 40-day line. I think it will. So that's just my play on it. Okay, so Nvidia hit the 10-day moving average at 553. I bought some. Not a bad idea, actually. Nvidia is a very powerful stock because it's got a very good checklist. Let's just kind of look at that, and let's look at where the 10-day line is on Nvidia right now. So let's pull up the chart here. Nvidia. There we go. Okay. Oh, did we get it? Oh, goodness gracious. We got a Tesla car. That's what we got. Let's pull it back to Nvidia. There we go. Sorry about that. I had my Tesla car came up there. I mean, it looks like it's bounced right off the 10-day. That's a good place to buy it, I think, because I do think you're going to see it move up from there. Actually, I really do. The next big hurdle that we have to get is 589. So we're a little bit below that, but I do think that's a good buy. Actually, on that, we're 34 days out from earnings. That's good. We have a stellar checklist. It's 9 out of 9. So I would be pretty confident at buying that level. I would set a stop loss at the 21-day line at this point, and that being 534. So 534 is equal to the stop loss for Nvidia on the 21-day line. So that's kind of where I would put it out there on that. So thank you for that. That's probably going to end up being a very good buy. Now that and I think you can buy a stock like Nvidia on weakness because it is such a strong stock. Well, better than my there we go. my phone holder isn't the greatest, but the Nvidia is better than that. That's for sure. How far will Nio go up? Who knows? Here's the thing about Nio, as you know, it's a Chinese stock, so it's a little bit dicey. Chinese stocks are harder to gauge because they don't use generally accepted accounting principles. But JP Morgan gave it a buy rating. So, and it is up today. So, there you go. I think that people are moving into it. People are definitely moving into it. And as of the Chinese companies, I think it's probably the best. We had an Easter egg there. That's excellent. So, I do think, it can move very, very nicely. So, I may be putting some Nio in the small portfolio because it definitely had a gap up. So, it's looking pretty good. 8 out of 9. And the funds are actually starting to come into it. It's 407 funds, so that's very, very interesting, very good. There seems to be a lot of interest in it, and it's had 2 very, very strong days up. So let's see how it performs tomorrow. Probably will be pulling back a little bit tomorrow, but unfortunately, there's no real place to buy it off of a base pattern. You would probably have to buy it at the 21-day exponential moving average, and that is basically right at about 2149. So we are at 2805. So we're significantly above that in terms of a place to buy it. So there you go. All right. So I don't think Nio is buyable at this point, tradesmen. I think we want to see it settle a little bit before we have a go for a buy point on it. But NET, Cloudflare may be. So we got to be careful, of course, because of the tremendous pullback. There's a big pullback today, as you can see. I'll show you that as well. And I think this is in sympathy with Fastly. There's been a pullback, and there is. I think you've got to be aware. And in 31 days, we are going to have earnings. And I think that with this, you want to sell it going into earnings. I think you want to sell it going into earnings. I'm not sure you want to be buying it right now. We had this tremendous gap up. I think the play on this one is basically to sell it the day before earnings, about 30 days from now. We probably want to be considering liquidation of it. So that's I'm going to put that down on my calendar as the day to sell Nio is going to be. The day to sell NET is the day before. Day before earnings. All right, so that's what I'm going to look to sell. When I'm going to look to sell NET, but I don't necessarily think there's a really good buy point at this level. Let's see if the market regains its footing, and then if it does, then I think then we can possibly do a buy on it. But it's a good stock. It's just the market right now. It's a little bit tough to buy right now because the market there has been some selling. And we don't like to buy when the market is selling off because that's not a good thing. So I think we want to be careful on that. Okay, this is the powertrain solutions for the commercial vehicle industry, kind of like Workhorse, Highland. And it does seem to be pulling back once again, unfortunately, today. It's still got a 97 relative strength, which is excellent, but it is pulled below the 50-day line. I just don't think at this point it's a good idea to be in it. And you might want to set your stop losses up here because it looks like it's pulling back to the 200-day line. It's fallen through the 50-day moving average. So that is not an excellent sign, unfortunately. It still has some very strong relative strength, but let's look at the buying criteria. The checklist is unfortunately bad. I just think that this one you want to be very careful on. I don't think this is necessarily, necessarily going to do well. If this is off more than 7%, you should sell it and wait for a better entry point. That's the main thing. Make for a better entry point than that. So that's kind of my Amazon buy points. Well, now Amazon might be different. Amazon is really very quality. So where could you buy Amazon? Where would I buy Amazon? Well, I would probably buy it right at the 50-day line. And let's see if we can kind of zoom in on that a little bit. I'm going to switch to the daily view here to kind of show you that it's been pulling back to the 50-day moving average. That's this red line here, and this is exactly almost where the 21-day line is as well. So I do think that let's see if it pulls back to 32.14. Let's see if it pulls back to 32.14. If it does and it reverses, I think that's where you want to be. Now, what do I mean by this reversal? And why would you buy it on the reversal? Well, when stocks pull back to a major moving average like the 50-day, sometimes and many times they will then reverse. And that reason that they do this is because programmatic trading basically will start to accumulate it at that level if it's fallen below that. So that many times is a very optimal place to buy a stock like an Amazon that's very strong. So that's where I would probably look to buying it at the 50-day average, and that would be right about $32.09 or about $3,200 is where that one would probably be the best. That's your best buy point right now. There was another buy point on an actual flat base. That's an actual real chart pattern a few weeks ago, and that's 33.44.29. But that was about 30. That was a while back, and that's the last real buy point. I don't think you want to wait until then. I think with Amazon, I think it's going to come back to the 50-day line. So I think that's really where you could buy Amazon at about about the 32.30 level. So that's where I see the buy point on Amazon. All right, so what about fast FUV and apps? Okay, well, I'm in apps, by the way, just so that you'll show. So let's take apps first. APPS. This is Digital Turbine. This is also a cloud computing company, and it's done very well, but it's pulled back, but it's still above the 10-day moving average. And so I want to show you the chart on that so we can take a look at it. It's pulled back to the 10-day line, and it looks like it probably will bounce off of that. It's at 38.10. It's off significantly today, about $3. So the question is, will it continue to move up this line? I think that it might, but it might if it starts to fall through the 10-day line, and then it potentially through the 21-day. Then I think we want to we want to head for the door on that one. But it's still got a 99 relative strength, so very strong when it comes to that. So I would basically set my stop loss on this this at about 34.62. So I'm going to put that up here on the chat. And that's APPS stop loss at 34. What was it? 34.62 at 34.62. So putting that out there in the chat. And by the way, if you're on TikTok, very easy to see what I'm doing here. All you have to do is go over to youtube.com/Dallas Trading Floor, and we are live on YouTube. And if you do go over there, really would like it if you could like and subscribe. I would very, very much appreciate that. That helps me out a lot. And I hope that that you would do that. So just hit that like button. There you go. Yeah. We got to put the graphics up there sometime. So anyways, that's on YouTube. So let's look at the next question. So Amazon buy points. Okay. Well, thank you for all the insight. I got stopped out of BE. What's your thoughts? Well, it's not bad necessarily that you get stopped out. I know it's frustrating. I don't like it when I get stopped out, believe me. And I got stopped out of Fastly. And, I broke one of my cardinal rules. When a stock goes up that fast, when it goes up 20% where you bought it, push that stop loss up. I kept my stop loss, at my standard. So, I didn't lose any money, but I didn't retain as much of the money as I wanted to. So that is just kind of a word to the wise, is that's one of the things to do. If you buy a stock and then it moves up very, very quickly, like Fastly did, then you want to start pushing that stop loss up right with it. Keep it within about 10% of where it's trading currently. And that way, if you do get a reversal, like we did in Fastly, then you're going to be sold out at a profit. So that is just a strategic way to go on that. I'm sorry to hear that you got stopped out of this, but isn't it better to be stopped out rather than lose your capital? I think it is, and I can see why it is. It just kind of went oop, boom, and it went down. It basically fell through that. It went to the 10-day line. It started out at the 10-day line, and then it fell through that 21-day exponential. So that happens sometimes. I mean, when a stock, that happens that happens sometimes. So that's one of the major reasons that I also, when we're looking to reset after it's moved up a lot, I'm looking to reset things. I'm looking to see these 21-day exponential moving averages, 10-day line. That's where I'm setting my stop losses, not necessarily at a 7% or 8% down from where I bought it. So that's that goes with the states. But you have the money, and you'll get ready. And when the next upcycle, we'll just build that watch list, and then when it comes back, it comes back. Oh, I am so sorry that you lost 4K on that. Well, I want to. This is a good time because I lost money on Fastly too. So I'll be just right up front with you. I did limit my losses though, and I'll show you what I limited them to by having a stop loss. Now I had an 8% stop loss, meaning that where I bought it, I set it at 8% below. Between 7 and 8% is typically where I set it. But even with that, I still, because of the way it traded, it still ended up costing me 15%. So I want to show you, how I did on that trade, so so that everyone out here won't, say, I'm not showing what I did. I absolutely will show you. I set a stop loss on this, and I ended up selling out. I ended up buying it at 102. I bought it on the up, and then I had a stop loss set off of this 102 price, basically down, basically about 8%, from there. So, but even with that, it still went down lower than that, as you can see, and I ended up losing about 15% on that trade. So that's, hey, it happens, but you want to take those losses fast. And that's why you want to be setting that stop loss. The stop loss that you want to set, though, you want to make sure you set the market stop loss. Now, why do you do that as opposed to the trailing one? Because the trailing stop loss resets every night. If you have one of these violent moves like we did, unfortunately, on Fastly, then that market stop loss will get you the first fill that you can after it opens, and that's going to give you the least stop loss, because there's people that actually lost more money than that didn't have stop losses. It did recover a little bit though. A lot of times it'll pull back and then it's recovered. It'll recover a little bit. So where's it going to go from here? Well, I think it's time to wait on Fastly, because I don't necessarily think it went up so quickly that basically let's just take a look at the chart on it. So we can kind of do a post-mortem analysis of it. And this is what happens sometimes when you get these violent movements. As you can see, there was a gap down, and interesting. This is why this is why these averages here are so important. This is the 50-day line. You can see it just it just moved right below the 50-day line. Now I was able to get a fill basically at the top of this red bar. Now, but I took this loss as well. So from about 103. Now I bought it right off the 21-day line, and then it pulled back. And so I basically, that gap in there was my 15% down. So that's kind of instructive on the way that it's a good to buy. You want to sell. You want to try to be very careful about setting those stop losses, and make sure that you set a market stop loss, because if you do set a trailing stop loss, it won't necessarily kick in until it's down below 7% below where it starts the day out. So with a market stop loss, it's going to sell you out immediately. A trailing stop loss, it's going to be 7% below where it first opens. So that's one of the reasons I always go with the market stop loss. So, anyways, but at least you got sold out, so you'll have some money to come back in, and hopefully do well. Hey, from Madrid, this channel between keeping holding versus reinforced. You know what? I'm in both of these. So I'm in both Tesla and I'm both in Apple. I do believe Tesla is going to make its buy point by the end of the year, which is 502, and that was just put out. I was out of Tesla initially because I got stopped out of some of my positions. I did have options on them, and I did get sold out on my options. But I'm back in Tesla, so my average buy price is probably a little bit high. It's about 425 right now. My average buy price on Tesla in some of my other portfolios. In my small portfolio, I have a position I bought in. I'll show you that as well, just for full disclosure. I bought Tesla basically at 419, so I'm in there about 419. I think it's a fairly safe level. It's above that, of course. And the current price is 448. I do think that we're going to move up to about the the $500 line. So I'm pretty confident with Tesla. Of course, I have stop losses on it, and so I'm not just naked on it, but I'm pretty confident on that. With .NET, I did reduce my Cloudflare position today. I did. I had more of it in some of my other portfolios. I didn't reduce it in the small portfolio. I'm still holding it there. But for full disclosure, I did sell half of my position in Cloudflare in another portfolio that I have, because I felt that it was getting a little bit too dicey, so I figured I'd take my profit and take some of my profit off the table with the drop that we had yesterday. Thoughts on Li Auto and Xiping? Okay. Well, I don't know what that is. That's interesting. So let's take a look and see if I can bring up that ALI. Oops. Did I get that right? No. ALI. Symbol not I'm sorry, I don't know. I'd love to give you more information on this one, Christian. I just don't know if I have if you could get a symbol for me. If I can get a symbol, I can definitely tell you. Sorry about that. Oh, LI Auto. Oh, okay, no problem. Thank you. Thank you. LI. Yeah, I unfortunately, there we go. There we go. Super. Thank you. All right. Thank you, Kristen. Thank you for clearing that up. Really appreciate it. Yeah, I mean, tough one to buy. This is a Chinese company again. I think if you want to be in Chinese automobile companies, I don't think that this is the one. I think Nio is the one you want to be in. It has an okay checklist, but I think that the Nio checklist is better if you want the Chinese auto play. Nio actually has a following. There's actually a JP Morgan analyst that came out very favorably on Nio. So I want to show you Nio's chart, and LI Auto. This is just a better bet. It's a little bit more expensive, but it's got a 99 relative strength, and it has an 8 out of 9 on the Bryan criteria. So I think if you have a choice between LI and Nio, I think you want to be on Nio. I think it's going to give you a little bit more safety. This is just a little bit too choppy of a chart for me. I'm not saying it's a bad company, but I think that now that we're starting to enter kind of this weird period where it's suddenly getting a little bit more volatile, I think we want to be a little bit more careful on our buys. So that's just my take on it. But I think that Nio is probably a better bet than LI on that. All right, so should I add more? No, do not add to Fastly right now. No, it's not time to add to Fastly. This is a kind of when you get these pullbacks like this, there's a reason for it, and it's probably a short position. Okay, let me tell you one of the reasons, and I really have to kind of explain why a stock would drop like that. You're like, wow, why would it drop like that? This is another thing too, is it's a good idea to basically sell your position the day of or the day before earnings. And the reason is because this is when they tend to drop out of the sky, okay? And this is what happened with Fastly. It's not that they only missed their number by a slight amount. It was not that much, and yet it still dropped. So that's amazing. Basically, you don't want to buy any more of that now. Just take your licks, and then we'll find another place to get in, move it up to the earnings date, and then probably sell it. The market is a little bit changed right now, but after those last few days, I do kind of anticipate that we're going to be very choppy into the election. I don't think that's going out on much of a limb. So I think we want to be a little bit careful. I wouldn't add to a Fastly position right now. And if I were down, I was down in my positions, I am completely out of Fastly because it triggered my stop losses. And as you know, I mean, I'm very strict on that. If it goes below a certain level, I'm out, and I just take my lumps because that's the way I do it. So I don't think you should go any more down on Fastly. Yeah, Dow has gone green. This is really interesting. I do think that there may be a rotation out of some of the NASDAQ stocks that I like to be in so much. But let's take a look at the Diamond. This is the ETF that tracks the Dow Jones 30, and this is a weighted ETF. So this is a good idea of looking at it. It has gone green, but as you can see, we're still pulling down 1, 2, 3 days. It's only down slightly, 0.12, but here's the thing: the Dow is not really that important. Not as important as the S&P is anymore. Right now, I just don't think that it is the right time to be in the Dow stocks. I still don't, even though everybody's saying value, value, value. I just can't see it. I just can't see it. I think you're better off if you want a less volatile. If you want a less volatile ETF that tracks a wide, broad range, I think you're still better off with a spider, and that's been pulling back too. So one of the ETFs that I want to look at is the SQQQ, and this is a shorting. Okay, and even that is it's also weird too. So let's look at the SQQQ. The SQQQ is basically it's starting to see some strength. That's interesting. Okay. So we're up on the SQQQ. If this continues, if this pullback continues into next week, we might want to watch list the SQQQ because this will take a position contrary to the S&P 500. But it's not time for the SQQQ. You just want to keep it in your bag of tricks. You just want to keep it in a bag of tricks. Huh, where's Jim? Okay, well, I'm here. I'm here. I hope you can see me. All right, Jim has abandoned us? I don't think so. Have I abandoned you? Have I abandoned you? I hope not. I hope not. I hope I'm here. Still here, Jorge? Gosh, I hope I'm still here. Yeah, I am. Okay. Okay, Draftkings, a buy point. Let's look at Draftkings. This is another stock I really like. It's been pulling back as of late, though. DK, Draftkings, DKNS. There we go. Ooh, where's Draftkings? Okay. Well, that was not fun. So let's go to Draftkings. DKNG is the symbol for Draftkings. There we go. DKNG, Draftkings. Okay, great. All right, Draftkings. It's down a little bit today. So let's kind of look at a different chart for Draftkings. I kind of want to look at it, first of all, kind of get an idea of kind of what else is out there besides Draftkings. Number 2 right now, CHDN is number 1. That's interesting. I think in the gaming group, Churchill Downs. Okay, that's why. That makes sense. Let's see if we can find a buy point on Draftkings. So that would be a good thing. So here we go with the chart on Draftkings. See if I can get you a good buy point on it. Unfortunately, this chart is starting to look not so good. It has pulled back. As you can see, we're in a downtrend. We're in a downtrend on it. It's still got a relative strength of 98. That's excellent. But I don't like this chart, at least in the short term. Let's look at the weekly chart to see if there's anything I can get, any kind of buy point that I can give you on Draftkings. There actually is a buy point on Draftkings at 44.79, and we're at 45. So we're right at the buy point on Draftkings. Now the question is, will it hold this line? If it holds this, if it bounces off of the 50-day moving average, and we have to look at this tomorrow to see if this bounces off of this. But if this bounces off of it, this might be a buy because it might reverse higher. But right now we have to be careful. This could definitely reverse higher. But you don't want to buy this at this time because this is called a falling knife, and you don't want to catch a falling knife. You want to see this reverse to a blue bar and move and bounce off of this 50-day line. But I do think it's looking, this is still a great stock. So I would watch this one. Wait to see if there's a reversal on this. I wouldn't buy this as it's moving down. Let's see if it's going to move above 45. If it does, on good volume, then I think you could possibly enter a position on it. But right now the buy point is about 44.79, and we're at 45. So there you go. Hopefully, I see. Okay, I'm sorry. Sorry, Jorge. I was a little bit late getting on the air today, so I apologize for that. Sometimes I just can't get all the stuff ready to go in time. So thank you for being patient with me. ADSK. Let's look at ADSK. ADSK, and let's take a look there and see what we've got on ADSK. And that's Autodesk, a great company, by the way. I don't know if you've done drafting or anything like that, but they totally revolutionized that industry. So it's a great stock. There is a buy point on it. We're a little bit below that. It's a cup. It's a first stage cup too, at 281.94, which is pretty good. We're at 252, so we can't really necessarily buy anything today. We could probably watch this one. Yeah, this is tough. This is tough to buy. It's pulled right into the buy. Well, actually, we can buy this. It's pulled into the buy zone. So we are currently in the buy on high volume. Okay, this is a good one. Yeah, thank you very much for this. By the way, this is a legitimate buy point at 551.39. So let me put it out there. ADSK buy point equals 251. 251.39. There you go. It's all there. So it's good to see a buy point today. Gosh, I've been talking about stop losses all today. So it's great to see a buy point out there today. So let me take a look at some people on TikTok. What do you think about the QQQJ? I don't know about QQQJ. That's a new one. So maybe it's part of the Qs. Let's see. QQQJ. Let's look at that. Okay, that's Invesco Next Gen. Wow, this just came out of the box. This is new. Interesting. I don't know a whole lot about this. Exchange Traded Fund seeks investment results of the NASDAQ Next Generation 100 Index. How interesting. Well, I'm very interested in this one. 33 checklist. Okay. Well, okay. Ownership. You know, if this were stocks alone, I wouldn't be so psyched on this one. But I like this concept. I do. This is an ETF. This isn't a stock. This is an ETF. So I like this one. I wasn't aware of the QQQJ, and now I am. So I'm going to put that on my book here. Very, very interesting. Well, thank you for that. QQQJ, and it's the NASDAQ. It's the NASDAQ Q Next Generation Gen 100 Index. This looks real good. Would I buy it right at this point? No, I probably wouldn't, but I would definitely be on the lookout. This is a brand new, and typically I don't like to buy anything until it's been out in about 3 months. I just want to see how it's going to trade. But I do like the concept of it. I really do like the concept on it. So I guess we did put out a buy point on Autodesk as well. So let's see. Okay, thoughts on ARK Invest and their innovation ETFs. You know, ARK Invest is great, but I have another one that I think that you might like a little better than ARK Invest. Kathy Woods she's pretty much a legend. And she has a heavily. I definitely like the way she trades. I mean, I have a heavy position in Tesla. She's made a fortune on Tesla. I think that she's really good. But I also like the Innovator IBD 50 growth, and that's symbol FFTY. And of course, I'm talking about ETFs now, not individual stocks. That's pulled back a little bit, but this is one that you might want to consider going into the end of the year. It definitely has pulled back a little bit. It pulled back down to the 10-day line and it bounced right back up. But I do think it's buyable at the buy point $39.95 on that. So right about $40. I think if you're looking to park some money, this might not be a bad one to do it in. This is basically the IBD 50. This is for long-term capital appreciation. So this has moved very, very nicely since April. It's moved basically from about 24 all the way up to about 40. So very, very consistent on this one. We did have a little bit of a downtrend here. I do think that if we move above this buy point, then we're in the money on this one. So this is another one to consider, is the FFTY as one that might be a very good ETF if you don't want to do some stock picking, or if you want to do a little bit of hedging. So that's good. Thoughts on Yeti? Really like their stuff. For everyone out there, Yeti makes a line of, as you probably see them in stores, but they make a line of these fantastic coolers that are like totally indestructible, totally the top of the line when it comes to coolers and stuff like that. They have a really good following. It's a little bit below its buy point on a consolidation base at 55.04. I'd probably watch this as one. Let's see if it can move beyond. Let's see if it shows strength above 55. If it does, I think you might want to be. This might be a buy. This is Lord Abbott is in this one. I do like this fund a lot. This is sort of. I like Fidelity Contra Fund the best, but this is my number 2. This is sort of, your good housekeeping seal of approval there. So I really like that. I like the fact that the funds are picking this up. It's got an excellent checklist, 8 out of 9. Wow, I think that this is a very interesting play. I do think it's worthy of investment, definitely. Would I be in it? No, I would wait on this one until it went past 55. I may put this one on my watch list though. I like Yeti. It has a great following as well. So thank you very much for that question. Very much like that. Are you going to go hold Fastly net? Well, I'm totally sold out of Fastly. I was stopped out of Fastly. Just be totally upfront about that. I'm still in net, but I'm going to be adjusting my stop losses on net. I have basically sold out of Fastly, so I want to show you that. I did have it in here, and as you can see, I did take a bit of a loss on it. I was sold out at 86.50. I was buying it at 102.08. I did suffer about a 15% loss, which for me is, as you can see, is fairly sizable. I mean, we did not have a good September. We did take some losses, but I held them pretty much to 8%. This was a gap down, so I really couldn't go against it. I'm still in net. I'm looking pretty good at that 29. I think it's going to hold, and that's where I am. So I have sold Fastly, and I am in NET for everybody out there. That's sort of where I'm at. OSTK, what's the buy point, and when is the earnings? Okay, well, OSTK, let's look at OSTK. OSTK is, let me see if I can give you a good buy point on OSTK right now. There we go, Overstock, great company. It is not acting as the way I like it to. It sort of had this tremendous run up, and then it's kind of been weak since then. It looks like it's trending back now to the 50-day line. It's still got a 99 relative strength, which is excellent. It's pulled back below the 21-day exponential. So this is not what I'm liking to see. Whenever you see the 21-day exponential cross below the 50-day moving average, that is a symbol of weakness. That means it's being disinvested right now from the fund. So I don't like that aspect of it. Because remember, we're trying to follow along where the funds are going and then go with them. So that's what we're trying to do here. We've got a checklist. It's 7 out of 9, which isn't bad. It definitely 6 out of 9 is my minimum criteria. 44% funds, that is very good. You know, here's the thing. I would hold off on this one, even though it is trending up. I think that, you know, it's weak right now. Let's see if we can find something with a better buy point if you're not already in. If you're in it, I would stay in it. But if you're not in this thing, I would not buy it at this point, just because I think we're entering a little bit of a rough patch for the next about 30 days or so before the election. I think it's going to be, you know, a little bit rough with a lot of the things there. So be careful. SAIL. SAIL. Take a look at that. SailPoint Technology. We had a pullback to the 10-day line, so let's look at that. Pullback to the 10-day line, we're right up to that. We've got earnings in 21 days. 97 relative strength, that's excellent. Let's look at checklist. It's 100%. 61% funds. Wow, I'm liking this one. I think this is strong. Interestingly enough, designs and develops and markets identity governance software that helps organizations. Well, boy, this is a good area. I like this. I like this general area. Where could you buy this? The problem is I don't really see a buy point on this. You know, I think the only place you could buy this would be a reversal on the 21-day exponential at 42.91. Tough to buy this one because it is strong. It's got a lot of going for it. It's just that I'm trying to find a entry point, and I just don't really see one on this unless it pulls back to the 21-day, and even that is not necessarily the best entry point. So I would say that the best entry point on this probably be about 42.39 if I were going to enter it, and I don't think I will. I want to watch this one. It looks like there's some consolidation going on here and possibly get a buy point. Let's see if I'm looking, can see, yeah, it's right to the 21-day line. That's really the only place you can buy it. It would be right about the 21-day line. And so if it pulled back to about 44.44, you could possibly buy it at that level. But I don't know. This is a tough one. But it does look very strong. It does look very, very strong. So, you know, 44.44 would be the buy point for that. And it's not a strict buy point. It's not a buy point on a formation. It's basically on the 21 days. So there you go. Ticker symbol Yeti. Zynga. All right, let's look at Zynga. We're almost out of time, unfortunately. ZNGA is the symbol, ZNGA. And let's see if I can get that. Yeah, Zynga. It is okay. We do. We have a formation on it. Excellent. We have a cup formation. So that is very nice. Very nice. Is there a buy point though? Let's see. I don't really. Well, there is a pivot. It's at $9.72. Interesting. You know what? I'm going to put this one down. This is interesting to me. Zynga, ZYNGA. I want to get back to you on that. I hope I can get back to you on Zynga because this is very interesting. It's got a bit of a low. It's only got a 79 relative strength, which is low. It's under $10, and I typically don't like. Unfortunately, I don't like stocks under $10, but it does have. Interestingly enough, it does have mutual funds, and it's got a lot of other funds in there. The checklist isn't that strong, though. It's only 4 out of 9, so it doesn't meet my criteria for buying it. But it's 52% owned by funds. So this is really interesting. This would be a much more speculative position. But, yeah, I want to look into this one a little bit more. I can't really give you a good call on this one. Because I see a buy point, but it's just too weak for me to buy it right at this moment. This is definitely a watch list stock. I'd like to see this go above $10 before I would be interested, unfortunately, on this. What do you think about Shopify stock in the U.S. and Canada? Well, Shopify or Shop is one of the strongest stay-at-home stocks, and it is it's been fantastic. It's kind of expensive though. And there's some other alternatives like eBay and Etsy that I think are also worth your time looking at. It has formed a cup. It is a pocket pivot essentially, and there is a buy point on it at $1,146.91. It's $1,078.34. So it's below its buy point, and it does look like. It does have a strong relative strength at 96, but it does have increasing funds, and it does have some very nice. It's got the Fidelity Contra Fund in there, so that's definitely a good housekeeping seal of approval. I would want to see this thing move a little bit closer to the pivot at 1146, but I do think this is buyable on increasing volume. So I do think it is. All right. Well, I have gone a whole hour. Got to waste a whole hour of your time. Sorry about that. Sorry to give you all that trouble. But TDD thoughts. Okay. Let's see. I want to get to some of the people that have been waiting. And okay. Most of this I would. Yeah. Okay. Apple. Would be the inappropriate. I don't think you want to be an entry into Apple right now. Thoughts on Beyond Meat. Okay, so some profit. Should buy at 45. Would you buy more or bounce back? I would wait on this one a little bit, Bruce. Thank you. That's a good question. I think right now let's the tenor of the market has changed a little bit. I think we want to be a little bit more careful right now. I do think it is a buy if it moves through 45 and it stays there, but it's pulling. Draftkings is really tough, so I would sit tight on Draftkings for right now because I think it's just a little bit too volatile into the election. I'm just getting a little bit of the willies here into the election, so I can't really recommend going into it. If anything, if you're in it, I think you need to protect your position, but I think. I definitely think we're coming into a little bit of a very volatile period on this. So that's kind of where I'm at. Well, thank you, everyone, for being so patient with me. I started late, so sorry about that. If you want to get on the Action Trade Alerts, it's super duper easy to do. All you do is you go over here to the website, which is dallastradingfloor.com, and right here where it says subscribe to free trade alerts, I need your first and last name and email. Hit that subscribe button, and you'll be on that list. So I appreciate that. And if you're looking on TikTok, it's super easy to get onto the Action Trade Alerts list. All you have to do is go to the profile, hit the link, and you'll be taken directly to the sign up page. So until tomorrow at 2:30, hopefully it will be 2:30. Thank you for being patient with me. I was fumbling around with my stuff. So thank you for being patient for me. I will be on, I promise you, I will be on at 2:30 tomorrow, and I won't be late. So hopefully to see you then tomorrow at 2:30. Happy trading.